Now, a dovish Federal Reserve has kept its key interest rate steady after a two-day meeting in Washington. It said the continued modest pace of economic expansion would accommodate further rate hikes in the future, but Fed officials have reduced the number of increases for this year. Kim Min-ji reports.
The U.S. Federal Reserve stayed pat, leaving its rate unchanged in light of uncertainty stemming from the global economy.
The committee decided to maintain its target range for the federal funds rate. This decision partly reflects the implications for the U.S. economy of the global economic and financial developments.
That means the current interest rate target of 0.25 to 0.5% will stay the same for now. Rates had been at near zero before the Fed decided to raise rates in December last year by 0.25%, marking the first hike in almost a decade. The Fed also revised down its growth forecast for the U.S. economy to 2.2% this year, down from its previous projection of 2.4%. The outlook for inflation was also cut to 1.2% by the year's end, down from a prior 1.6% call due to the prolonged effects of falling energy prices. But the Fed wasn't totally pessimistic about the U.S. economy.
Growth is expected to run somewhat in excess of potential, and with a continuing improvement in the labor market, I think we'll see upward pressure on inflation.
While the Fed said moderate economic expansion and continued job growth would accommodate rate hikes down the line, Fed officials are now calling for 2 hikes this year, down from the previously envisioned 4. On the dovish approach, Wall Street posted gains on Wednesday. The Dow Jones Industrial Average closed up more than 0.4%, while the S&P 500 added more than 0.5%, reaching a 2016 high. The tech-heavy Nasdaq rose over 0.7%. Kim Min-ji, Arirang News.